So this is to explain how to analyze uh, price of gold using the smart money concept and some indicators. So here using SMC, let's start from here. Okay, let's start from here. So price have external high, external low, external high, another external high, and we have a break of the external low here, around here. So let's put that with this horizontal line. We have this break of this external low. We have it here with this candle, red candle closing here as change of character to bearish. All right, and you can see a retest. I can see price dropping down to start to form external low, external high, external low, another external low, external low, external high. Okay, and we have external low, and we have a change of character here. Okay, at that point of change of character where this particular bullish candle closes above this external high, that's a change of character. Expect price to go up, and price went up this way. Okay, but this strategy is going to be looking at the indicators at the point of change of character. And remember, we have the first change of character around here, where this red candle closed below this external low. We are able to guide ourselves with the fractals to know the external low on this uptrend. Uptrend is higher high, higher low, higher high, higher low. Okay, that's uptrend. Now we have this external low here, higher low here, and we have a close below the higher low. Okay, this place can be also taken as external low as well. We have a close below the change of character. This is a change of character here. This is another change of character here. Before we now have this fair value gap, and then we have a retest into that fair value gap, and then we can see price dropping. So what we are going to do with the indicators is that at the retest, we have to look at the first three bearish candle close. That's 1, 2, 3. Okay, let me take it again. At the retest, this is the retest into the fair value gap. Look for the first three clear bearish candle close below 21. This 21 EMA. This one, this two, this three. Place your entry will be here. The stop loss will be above the lapping candle. It's the lapping candle. So above the high of the lapping candle, that's where your stop loss is. Right? Now your entry will be ratio 1 to 1 or ratio 1 to 2. This ratio 1 to 1. This your take profit will be ratio 1 to 1 or ratio 1 to 2. This ratio 1 to 1 and this ratio 1 to 2. Don't forget we use SMC. SMC was used on 1 hour time frame, but our entry was when we now have three clear bearish candles. Apart from this lapping candle, the 3 clear 1, 2, 3. That's where we now entered. But SMC traders, we enter this particular fair value gap and ride more profit now. But to play a safer trade, we enter here. Okay, and write down. All right, with our stop loss being here, our entry here, and I take profit either ratio 1 to 1 or 1 to 2. Okay, that's that for that particular set. But we have to look at the other indicators before the appearance of this retest, or before the appearance of this change of character candle, we can already see the appearance of this crossover here. This red line crossed over here. Take note. If this red line crosses over, then you now start to see change of character, and then you start to see retests, and then you start to see formulation of three red candles on the 1 hour time frame. Then you are good to go. Apart from this crossover to show bearish signal, you also have this crossover here on the second window, where this particular red candle, a red line, crosses down on these two moving averages, and also crosses down on the dotted parabolic SCR, and then eventually crossing down on the Ichimoku. That's for bearish, analysis. Okay, you say this cross down appears before the formulation of all what happened here. But as what happened here is forming, and we are entering target, this is already crossing down. But just as this is crossing down to signal that all this is going to happen up, you can see this also crossing down here. This crossing down here, then this happens. Then as the entry setup shows up, then we see this crossing down. So let's take a look at the bullish scenario. Let me remove all the objects. So looking at the bullish scenario, we can see a low here, low, higher low. You can see this external low, another external low, another external low, external high, external low. You can see another external high, where we have this change of character here happening here. So at the point of change of character, normally we place our horizontal line to show change of character to the bullish side. Now after that change of character, we can see retest, price retesting, then price continues up. Okay, but before then you can see this crossover happening here, and before then you can see on the 1 hour time frame, you can also see this crossover happening before this, and before this, all this happening. Okay, so this already happened, then this happened. Then by the time we get our entry, remember our entry is you look for three clear, like this is the change of character, and this is the retest. Look for three clear bullish candles after the retest. This is 1, 2, 3. Okay, so your entry will be here, your stop loss will be here. All right, okay, and ratio 1:1, your ratio 1:1 after the formation of the retest is your ratio 1:1. You can see price giving you ratio 1:1 here, profit. Then you now have like ratio 1 to 1.5, because this is not up to 2 before price start to trend lower. Okay, and as the formation of this entry here, we can see this already comes out of the cloud, Ichimoku cloud. All right, so if we delete and then look at the next trend, we have the fractals guiding us on external low, external high, external low, external high, external low, external high. Fractals are guiding us external high, external low, external high, external low. Then we start to see change of character here and a more prominent change of character here. Okay, so we can place this here. And we have this change of character. Okay, and we can see this retest happening here. I see retest happening into the fair value gap around here. So from that retest, we count 3 bearish candles. That is free. You can see free 1, 2, 3. Free 3 bearish candles. That's where we have our signal. And this is the stop loss. This is stop loss. This is the entry. Beg your pardon. Yeah, this is the entry. 1, 2, 3. That's the entry. So we measure 1 to 1.5 is 1. Okay. Can we get 1 to 2? Of course, we were able to get 1 to 2. Okay. That's a good shot. But some SMC trader will enter at this point where we have a retest into the fair value gap. So SMC traders will, have an entry at this point. Even as much as the change of character has formed, we have their entry here. Okay, or they could have their entry at the upper leg. All right, before the formation of any 3 clear bullish or bearish candle. They have their entry here, or they have their entry here. You can use megaphone strategy to even decide that this is a proper entry point. When the megaphone strategy, which is the close of this bullish to this small candle, you draw your megaphone. Let me delete all. Now you have change of character here, which is here. It's your first change of character. This first change of character, external low, and then you have price closing below the external low. This is your first change of character. Now you can see, you can now conveniently plot a reversal into that change of character of fair value gap by drawing megaphone analysis. This megaphone analysis to know whether price is going to go down or not. In line with megaphone, this particular third candle here gives us the swing. That's the price is dropping further, and we have the same thing happening here. So that's that for the video. See you on the other side.